You only have less than 6 months to prepare for what's coming. The worst situation has already passed. The American stock market will encounter a battle of gods against gods, demons against demons. All the bad news can't stop the strong recovery and the market's explosive boom. If this time you still don't bring your money to buy the dip in the American stock market, then in the next 10 years you will have to accept the class divide. You will miss the opportunity to step up to a higher class, and no matter how hard you try, your wealth will not see any change. Is that really the case? The Stoic mind warmly welcomes all of you. Have you noticed that when all of Wall Street says the American economy has entered a recession and the American stock market has been plummeting for more than 10 consecutive days, only then does the Federal Reserve, the Fed, speak up? However, instead of lowering interest rates to make borrowing for investment easier and save the stock market, they take even stronger action, warning the whole world that inflation in America could become even more severe. This means that if you do business in America, your costs will keep rising. If you live in America, the prices of goods you buy will become more and more expensive. At the same time, America's GDP will no longer grow as it did before. People will spend less, invest less. In short, making money will become increasingly difficult while prices continue to climb. This is precisely an economic paradox. When hearing such a risky scenario, if you had to bet on whether the American stock market will rise or fall, even the most foolish person would bet on a sharp market decline, right? Yet, right when the market opens, the American stock market unexpectedly surges strongly. This shows that most people are rushing to buy, buying as much as they can without caring about the price. Why is that? While most people don't care about the downturn, few realize that the Indonesian stock market has collapsed and the Turkish stock market has even fallen into a severe crisis. This means that the traps set by American capitalists a few years ago are now exploding one by one. So, who will be the next victim? Previously, when the Fed raised interest rates, American capitalists had already scooped up assets from Japan, South Korea, and Europe. Now, these markets are gradually recovering. This means the bottom fishing phase is complete. Assets at the bottom will soon explode in growth, while assets that had previously grown strongly will quickly collapse. The biggest profit-making investment trend for 25 has been revealed. But what does this mean? When investing, do we make money when we buy assets or when we sell assets? Winning or losing depends on the timing of placing your buy order, or on the entire preparation process beforehand. Think about a race. If you win, is it because you only ran faster for a few seconds or minutes on the track? Why could the Qin state sweep away the 6 states during the Warring States period? Why did Bai Qi become an undefeated general, known as the war god of the East? Was it because he charged into battle with a weapon and then decided the outcome? I'll tell you, every victory or defeat in life comes from calculation, from strategy, from preparing for university entrance exams. It's like that. Pursuing love is like that. Investing to make money is also like that. If you only wait until you sell your assets to determine whether you've made money or not, then you're not investing. You're gambling. If your profits depend on praying to the gods or how sincerely you pray, that's not investing. It's just a game of chance. But for real entrepreneurs and investors, they always win first before seeking battle, meaning they only join the game when they're certain of victory. Moreover, it's best not to spend a single penny and still make money. Not only that, but have others make money for us, even having them proactively bring money to us before we make a trade. But if we see that we can't win, we immediately don't fight, even run away right away. So if you don't know that the capitalist's plan has entered the harvesting phase, then no matter if you buy American stocks, short sell, or invest in American bonds, you will lose money. As I said in the previous video, if you don't want to become a victim of this harvest, but still hope to rise to a higher class, then follow my channel. I will continue to provide you with a lot of important information. If you're afraid that after listening you'll forget, wasting your time, you can like this video. That way, the video will automatically be saved to your playlist, helping you rewatch it anytime and follow the plan. First of all, everything that needed to collapse worldwide has already collapsed. The American capitalists have also almost finished buying the assets they needed to buy. This means this round of shearing the sheep has ended. The next phase is to help the sheep grow their wool back quickly. What do I mean? Before I analyzed this plan, many people didn't believe it. I can understand. But now, when everything is happening exactly as predicted, when history was like that and the present is repeating itself exactly, if you missed the opportunity to make money in the first round, will you continue to miss the second round? What is the purpose of the Federal Reserve, the Fed, and the capitalists when they raise interest rates? Suppose today you are a European. You have 100 million euros in hand. Banks in Europe only pay you 1% interest per year, meaning you deposit money in the bank for a year, do nothing, and still get 1 million euros in interest. But now the Fed raises interest rates. You just need to convert your 100 million euros into dollars and deposit them in an American bank, still doing nothing, but America will pay you 5% interest, meaning you get $5 million in profit from doing nothing. A five-fold increase. So what will you do? Of course, you will sell all your euros, convert them to dollars, and deposit them in an American bank. The result is that the dollar keeps getting stronger, while other currencies around the world continuously lose value. So, when the whole world deposits money in American banks, what will American capitalists do? They will use the strengthened dollar to buy back the devalued assets and currencies globally. That's why last year the Japanese yen, the Korean won, the euro, and many other currencies in Asia and Europe dropped sharply. For example, before, to buy an asset in Europe, I had to spend $1 million. But because the euro has lost value, now I only need $700,000 to buy the same asset. This is no different from buying at a 30% discount. Last year, many companies in Asia and Europe were acquired by American capitalists. Business owners and shareholders were gradually replaced by American bosses. In other words, no matter how hard Asians or Europeans work, the money they earn will eventually flow into the pockets of American capitalists. But if your country's economy isn't too developed, doesn't have much money, or doesn't have large businesses worth acquiring, then what? It's fine, you still have natural resources. Look at Turkey, a country with a lot of resources like oil, gas, and fuel pipelines. In ancient times, if you wanted to seize another country's resources, you had to wage war. If you won, all those resources would belong to you. But this method of plundering not only exhausts the people, costs a lot of resources, but also earns you the reputation of an invader. Nowadays, things are a bit more civilized. When Turkey lacks money, I can lend them money. It seems like I'm very kind, proactively lending when they need it. But the problem is, I'm also worried that they can't repay the debt. So they have to use some assets as collateral. If they can't repay the debt, those assets will belong to me. But it's okay, they won't fall into a situation where they can't repay the debt, because I lend at a very low interest rate. When the deadline comes and they still can't pay, they can continue borrowing new debt to pay off the old debt. In 2003, Turkey still owed more than $23 billion that hadn't been paid off, but they continued to borrow more than $16 billion in new debt. To borrow money, they had to mortgage important national assets like energy, transportation, and banks to American tycoons. The seeds of this plan were sown back then and have continued to grow. Until last year, when the Federal Reserve, the Fed, raised interest rates, the interest rates on Turkey's short-term debts immediately doubled. Because they were short-term debts, within a few months to a year, they were due for repayment. When they couldn't repay, they were forced to use resources to settle the debt. As a result, Turkey's oil and gas were acquired by Western tycoons. The price of gas that Turkish people have to pay is entirely decided by Western tycoons. Moreover, Turkey's rare earth mines, minerals, and banks were sold at dirt-cheap prices, practically given away to American capitalists. A similar situation also happened in Indonesia and Japan. For example, Indonesia has the world's largest nickel reserves, and nickel is a crucial material in battery production. When the Fed raised interest rates, Indonesia's rupiah also rapidly lost value, creating an opportunity for American capitalists to use the strengthened dollar to buy up Indonesia's nickel mines. This means the nickel supply for Tesla's batteries in the future has been secured. Why do American capitalists have so much money to acquire global assets? Because last year the American stock market surged strongly. As mentioned, when currencies around the world lose value, the global economy weakens. Everyone's assets lose value, but living costs become more expensive, especially after the war in Europe broke out, disrupting the energy supply in this region, causing global capital to flow only into America, the country with the most stable economy. The American government previously collaborated with tycoons to stage a play. It can be seen that since 2020, the American government's public debt has increased from over $20 trillion to $36 trillion, while the amount of money in the American Treasury has been increasingly depleted since 2020. So, where has this money gone and why? When the Fed raised interest rates, could American tycoons acquire all the world's assets? Globally, money isn't just deposited in American banks to earn high interest rates. It mainly flows into the American stock market. Besides the reason that the global economy is weakening and only America remains strong, more importantly, American companies seem to be making a lot of money. But why, after the pandemic, when many people had to work from home, did American companies become even richer? That's because the American government poured countless subsidies into them. In 2020, when the Federal Reserve, the Fed, pumped money into the market by expanding its balance sheet, American companies borrowed a huge amount of money at near-zero interest rates. So, what did they do with that money? First, they used the money to buy back their own company's stock, pushing the stock price up. This doesn't need much explanation, everyone understands. Second, they used the money to collaborate with each other to beautify their financial reports. The American government gave money to businesses. This business bought products from that business. That business bought goods from another business, and so on, creating a cycle. Everyone had high revenue, profits were beautified, and then they paid taxes back to the government. Thus, the money pumped out by the government didn't disappear, but returned to the government, while American companies had impressive business figures to attract capital from around the world into the American stock market. When American companies had money, they used it to repay the government. At this point, the American government both had money to pay off its debt and helped American capitalists attract international capital. These capitalists, with the strength in dollars they had, continued to buy up cheap assets and resources globally. Many people believe that when interest rates rise, borrowing money becomes difficult. Business and investment activities slow down, leading to an economic recession and a stock market crash. But the reality is completely the opposite. Rising interest rates cause global money to flow into the American stock market, helping capitalists make huge profits, while the American stock market booms strongly. Capitalists like Warren Buffett are the biggest beneficiaries. They sell stocks at high prices, collecting a massive amount of cash, then deposit the money into American government bonds to earn high interest rates, while also buying up assets being sold off in Japan, Asia, and Europe. So, if you only rely on economic theory to hastily sell stocks when interest rates rise, then you've missed the crazy upward surge of the American stock market. Last year, looking at financial reports, many companies had low profits, high valuations, or even losses, but their stocks still skyrocketed over the past year. Why? Because in the stock market, stock prices don't depend on whether a company has potential or not, but on whether the buyers or sellers have more money. If the sellers have more money, even the best stocks will drop in price. Conversely, if the buyers have more money, even the worst stocks will rise in price. In other words, whether stock prices rise or fall is decided by the big players in the market. So, we don't need to care too much about financial reports or economic analysis. The most important thing is to follow the money flow of the big investors. Now comes the important part. At this point, true capitalists like Warren Buffett have already sold all their stocks at high prices. That means, who is holding American stocks now? It's the capital from around the world. The first step of the plan has been completed, raising interest rates to suck money from the globe and buy assets at cheap prices. Normally, the next step would be to cut interest rates, reduce borrowing costs, and let money from America flow back to Asia and Europe. At that point, the assets that the capitalists have acquired would surge in value. But what's the problem? The American president has changed, meaning whether the second step can be carried out or not still needs to be negotiated. We can clearly see that the American Treasury is about to run dry in the next few months. The American government might have to shut down. So, what will they do? As I analyzed in previous videos, the American government will need to create a recession, causing the American stock market to plummet, forcing money to leave stocks and flow into American government bonds. At that point, money from around the world will leave the stock market and flow into American bonds, meaning into the hands of the American government. But what's happening? According to recent reports from American banks, where is the money flowing? Not into American bonds, but to Europe and the UK. Look at the dollar index. Since the beginning of this year, this index has dropped sharply, meaning the dollar is losing value compared to the euro, the Japanese yen, and other currencies. Why is it losing value? Because people are selling dollars to buy back euros and yen. What does this mean? It means the current American administration is trying to create a recession and cause the stock market to collapse so that money flows into American bonds. They keep emphasizing that American bond interest rates are at their highest. If you don't buy now, you won't have the chance to buy at such high rates later. But what about the American capitalists? They also want a recession, followed by an American stock market collapse. But the difference is that the capitalists don't want the money to flow into American government bonds, meaning they don't want the money to return to the government. Because once the American government solves its money shortage problem, they will have more control. At that point, the American capitalists will lose their voice. From a benefit perspective, if the stock market collapses, the capitalists can manipulate the market, pushing stock prices from their highest to their lowest. Then they will pressure the Federal Reserve, the Fed, to expand its balance sheet and pump money into the economy. At that point, they can borrow newly printed money at near-zero interest rates and buy back the stocks they sold at high prices earlier. This way, they will continue to control the American stock market. The most important thing is, when money flows out of the stock market, the American capitalists will redirect this money to Europe or other countries where they previously bought assets at cheap prices. This way, they will regain control of those undervalued assets. So, whether it's the American government or the American capitalists, if the stock market collapses, it benefits them both. The difference is that the American government wants to suck money into bonds, while the capitalists want to channel money into assets in Europe, Japan, and other regions. Why is that? Pay attention to this point. Many people only look at the American capitalists and forget that, in reality, they originated from Europe. In other words, before America became the world's #1 superpower, who was the hegemon? It was the UK and Europe. So long ago, there was a class of aristocratic tycoons who accumulated enormous wealth in Europe. We can call them the European Financial Alliance. These tycoons have deep roots in Europe, but when America rose and became a superpower, they gradually shifted and took root in America. This is exactly why American capitalists can easily manipulate Europe, because in reality, they never left. They just moved their operations from Europe to America. Capital has no national borders. No one says that if I was born in Vietnam, my entire family must stay in Vietnam forever. There's no such thing. For capitalists, the concept of a nation doesn't exist, only maximizing profits. These European financial conglomerates parasitic in America all supported the previous American administration. The reason is that the previous administration pursued a globalization policy. Simply put, America printed money and spent it around the world, helping other countries earn dollars, boosting their economies, while the assets that the capitalists held in other countries also increased in value. But the current administration pursues isolationism, causing conflicts with the world, imposing tariffs, forcing other countries to move factories, labor, and technology to America. Simply put, before, globalization meant other countries worked hard while America just printed money and spent freely. Then the money returned to America, still staying in the capitalists' pockets. But now the situation has changed. Before, America just printed money and spent freely while the capitalists benefited. But now the new administration wants to produce, earn, and consume on its own, no longer letting international financial conglomerates manipulate things. Simply put, before America was bled dry by the capitalists. Now, the current administration wants to push back the control of these European tycoon groups. So why doesn't Warren Buffett invest more in European assets, like other financial conglomerates, but instead increases investment in the yen and Japanese stocks? Because Buffett is a pure American capitalist, while Europe has long been divided up by European tycoons, meaning Buffett's voice there has no weight. Moreover, Buffett can't buy gold either, because gold is an alternative to the dollar, held by governments around the world. If he pours money into gold, it's no different from devaluing the dollar. Japan, however, is a different story. Previously, many people borrowed money in Japan to invest in America. Once the American economy collapses, the money will flow back to Japan. Buffett recognized this early and took a step ahead by heavily investing in Japan. Not only that, when assets in Japan were sold off at cheap prices, he also borrowed money right in Japan to buy in. With such thinking, Buffett became one of the 5 largest investors in Japan. In other words, the money that the Japanese are earning is also flowing into his pocket. All of this has been mentioned in previous videos. So what's the core takeaway from this? When investing, we must look for opportunities with a high probability of winning. The most important thing is to understand where the big money is flowing. Whether it's the capitalists or the government, they both benefit when the American stock market collapses. But if you pay attention, you'll see that Buffett's financial funds and the European tycoon conglomerates still haven't poured money into American stocks to buy the dip, nor have they bought long-term American bonds. Instead, they're pouring money into assets in Europe and Japan. So why did the American stock market surge strongly this time? If you look at the American stock market indices and the overall market, you'll notice that right before the surge, there was a rebalancing of derivative contracts. So a high trading volume is normal, but it doesn't hold much reference value. The key point is that on the day the market surged, the actual trading volume wasn't high. This means that although there were people buying aggressively without caring about the price, the number of investors actually participating wasn't large. Morgan Stanley also conducted a survey and found that over the past week, individual investors poured more than $12 billion into American stocks. Additionally, if you pay attention, you'll see countless Chinese individual investors buying ETFs that track American stock indices, such as the S&P 500 ETF from Che Securities, to the point where the closing price hit the ceiling and trading was temporarily halted. So why are retail investors rushing to buy American stocks? Because typically when the American stock market drops 10%, there will be a short-term recovery. However, for investors like us, when the big money hasn't really entered yet and only retail investors are pouring money in, then whether you buy or short, the probability of losing money in this market is still very high. This time, if the market only recovers slightly due to retail investors buying in, the profit you can make is very limited because the recovery range isn't large. If, after the recovery ends, you haven't made enough money and don't exit in time, then when the market crashes again, you'll be stuck at a high price. Why is shorting also prone to losses? Because entering too early, the American economy is still contracting right now. You can't know exactly when the market will truly collapse. If you short too early, like now, just a single recovery wave can force you to cut your losses. If you use leverage, you even risk blowing up your account. Therefore, shorting is much harder than buying. Only when you're certain that the American stock market has truly entered a bear market and could decline for an extended period, perhaps a year, should we consider this strategy. But even then, I only say consider because we can still choose to invest in other assets like gold. Since the second half of last year, I've started converting a large portion of dollars into Japanese yen because I frequently travel to Japan and have noticed the risk of the dollar losing value. If we short, we would also choose weaker stocks, such as those lagging behind the blue chip group. Even if you haven't invested in any assets in the first half of this cycle, it doesn't affect you too much, because if you hold cash in defensive currencies, when the dollar loses value, those currencies will appreciate and preserve your wealth. Our ultimate goal is to wait for the Fed to expand its balance sheet and print money again. Before that point, if the American stock market collapses, it will be the greatest bottom fishing opportunity of our lives. Many people say that I've repeatedly warned that the American stock market will collapse, but so far it has only dropped sharply, not completely crashed. So when will it happen, you ask? I don't have a crystal ball, nor do I have superpowers to know the exact day that will happen. If someone told me they knew the exact date, I wouldn't believe them either. But as investors and entrepreneurs, we don't need to guess the specific timing. The important thing is to bet on scenarios with a high probability of occurring. If this scenario happens, we must be among the winners. If it doesn't happen, we can't lose too much either. At most, we just won't make a lot of money. In principle, Warren Buffett is a big player. We are retail investors. Our strategies may differ, but in reality, our investment mindset is the same. Are our predictions accurate? How will we adjust our investment portfolio in the coming time? Due to time constraints, I'll end the video here. I share knowledge about wealth building, business, and investing to achieve financial freedom. If you don't want to miss out, please subscribe to the channel, turn on notifications, and share this video. I sincerely wish those who liked this video to achieve financial freedom soon. As long as you find 1 or 2 sentences in this video that can help your life, I already feel fulfilled.